If you want to get into a home, there are certain things that you should not do. Some of you may think getting a home loan is difficult, and it absolutely is. If you have bad credit, if your income looks unstable, if you look shady, if you're paying your rent in cash, those are all no-nos. And we're going to get into it this video. My boy Angelo is going to give you all the tips you need. So make sure you stay until the end. If you get something valuable here, make sure you like this video. Let's get into it. Don't forget to file your taxes. Angelo, why is filing your taxes so important?
Man, that's a big one, especially if you are a self-employed borrower, because we're gonna pull a 4506T tax transcript from the IRS to make sure that you're paying Uncle Sam. In order to get a conventional loan, government loan, they want to make sure you're paying taxes. So if you're not filing taxes, we're gonna find out, and we're going to actually find out if you've given us the correct tax returns too that you did file. So very important that you give us that information and that you file your taxes. Now, for a W-2 wage earner borrower, it's not as strict. You don't necessarily have to file your taxes, but we're going to pull a W-2 transcript. But if for some reason we need to pull tax returns, then it'll show up that you didn't file, and that's a big no-no. But first and foremost, self-employed borrowers, you need to file your tax returns. That's just priority number one.
Don't miss payments, like credit card payments.
That's a big one. I mean, in order to see that you are a responsible individual, they want to make sure that you're paying your debts on time in a timely manner, right? What's the best way to prove that is to pull your credit to see if you have any credit cards, installment loans, anything that you have on credit. They're going to pull the history. They're going to make sure that you're paying it on time. If you're not paying them on time, it is going to crush your credit score. In my experience, I have seen up to anywhere from 60 to 100 points with one 30-day late. When it comes to a missed payment, which is crucial when it comes to getting a pre-approved for a loan. So that's huge.
Angelo, I have a question because we were just talking about before we started recording here about, let's just say I have a 740 credit score, right? And I missed some payments and my points dropped down 100 points.
Sure.
How bad is that gonna hurt me getting in a home loan or getting into a home period?
Yeah, I mean that's huge. That is if you go from 740 to a 640, that's a completely different loan program. We'll have to switch you most likely from a conventional to an FHA loan, where they're not as hard on you when it comes to your credit scores. But if you had any down payment assistance programs that came with that, that could blow that out of the water. So you really want to make sure that you make timely payments every single month going forward, especially when you're going through the loan process, because it could take you from an approved loan to a denied loan because of term, interest rate, and things like that. So very important.
Angelo, I'm very young. I'm 22 years old, and I have a lot of friends that just like max out their credit cards. They swipe as their credit card as much as they can. So if they have $2,000 available on their credit card, they'll swipe it until they get to that limit. And I would imagine month over month that is like capped out. Is that a bad thing? Do you get to see that often, and that's like a no-no you don't like seeing?
Yeah, no, we don't like seeing credit cards that are maxed out. So that means that you're utilizing every single penny that credit card has available to you, which will ding you when it comes to your credit. It's going to lower that credit score. It's not, it's not going to drop it like a missed payment will, but they're going to see that you're maxed out and you're not paying that down. So you're maxing yourself out. So what they really want to see is 30% and less utilization of that card. So 10% is the best, but 30% and below is where you want to stay. So let's say you have 3 cards, but you're only using 1 and that's maxed out. A quick tip to help your score is to transfer some of that balance from that 1 card and spread it out over the 2 other cards. So you're not maxed out on that 1 card.
Don't pay rent in cash. Angelo, does this make you look shady?
Sure. Yeah, it kind of does, right? I mean, the only person that is good for is the landlord, right? That landlord's not reporting it most likely. He's not paying Uncle Sam. But when it comes to you, the borrower, if we needed compensating factors, if we needed to see an additional trade line for whatever reason that may be, if we can't prove that you're paying rent either in check, Zelle, Venmo, money order, what have you, every month like clockwork, that's a ding against you. So you really want to make sure that you're paying every month verifiable rent payments like clockwork, so we can help the risk factors when it comes to your home loan approval.
Don't change jobs during loan process. Is this bad?
Yeah. So yes and no, right? So it's bad if you don't tell us, right? So I don't know why you wouldn't want to tell us, but it's bad if you don't tell us, because we're going to do a final verification prior to closing that loan, prior to closing date, to make sure that you're still employed. And if you're not still employed at that same employer, it is going to blow up that loan and it will be denied at the very end. So the best thing to do is to tell us, because we can fix it, right? We just have to get a verification of employment from the new employer, and we can use what's called future income if you haven't started that job yet. So that's very important. I can get into the details of that. I could go down a rabbit hole with that, but yes, we can. We can get you approved for a loan if you change jobs. You just got to make sure you tell us. But now here's the thing. If you go from a W-2 position, salary position, to a 1099 or what they call self-employed, that's a no-no. That is a big no-no, because you have no history of being self-employed, which they need to see history. The lender has to see 2-year history, 1 to 2 year history at least, to make sure that, hey, is he self-employed? Is he going to sustain his income? Is he going to be able to do what he does, because he hasn't done this before? So it's very important. But now, on the other hand, if you go from a 1099 position to a W-2 position, that's easy breezy, right? Because they know it's usually a company that's been in business for a long time. You started a position, it's salary, it's set every month, so they don't have to worry about it. So very important, just depends on which way you go when it comes to changing jobs. And once again, communication. Just talk to us, right? We're not the police. We're going to help you fix the problem and get you to closing.
Angelo, probably the worst thing someone can do on the next one here is co-signing. So you shouldn't be co-signing. And I know this kind of pops up with family members, but I feel like people need to realize, like, this is in some sorts like a business transaction. Like, this is not family related. This is like business here, and this could hurt your future. Is that right?
Yeah, no, for sure. And some people don't understand that when you co-sign for somebody, you're liable for that payment, right? That's going to be on your credit report. That, let's say it's $700 if you help somebody buy a car. That's a liability that you're going to have to take on. Let's say that person stops making that payment. You may not even know that they stopped making that payment, and that is going to crush your credit score, okay? Now, you may want to, be a nice family member and do that, but you just have to be careful. You have to make sure they're paying their payments on time, every single payment. And the only way we can exclude that from their debt to income ratios is if they have 12 consecutive months. So if if you just help them get a car loan, it's been 4 months, we can't exclude it. So just think really long and hard before co-signing for somebody that, hey, am I going to buy a house here in the next year or two? Am I going to buy another car in the year or two? You have to understand that it's going to affect you in one way or the other. 9 times out of 10, I've seen it. It's been negative. So just try to stay away from it.
Angelo, what are some things that pop into your head? Because you might be in a position one day where a family member comes to you and be like, hey, Angelo, can you co-sign for me? What would be a scenario where it would make it, worthwhile to do that for a family member? What do you need to see from that family member in order to co-sign for them?
Yay. That's a good question, dude. If I would probably pre-qualify them like they're getting a loan with me, right? You got some money in the bank. How's your other payment histories, right? Let's look at your credit report. I'm going to look at it just like I look at every loan application. I pull the credit. I'm going to make sure you're making timely payments, because if you're not, I'm going to have to think twice about lending you my credit, because literally, if you have good credit, I like to call it walking on water, literally. So if you have bad credit, you can't get anything. So you need to hold that credit near and dear to your heart, legit, for anything that you do. Because if somebody messes that up, it's very hard to fix it.
Yeah, it sounds like at this point you should probably just stay away from it. You don't want to make family Christmas awkward, and you're like, well,
Very
Angelo
much
has
so.
shitty credit,
Right. Or you're not getting a Christmas gift this Christmas because you missed 3 payments, and I'm co-signed on that. So, you know what I'm saying? Yeah, just I'd stay away from it for sure.
Last thing here, don't do ridiculous installment loans. Angelo, do you see this a lot?
I don't see it a ton, but the times that I have seen it, it's like these buy here, pay here's. Their interest rates are through the roof, right? They're probably more than credit cards. The payments are high on them, and we have to hit you for it. And there's no way we can get around not hitting you for that debt, unless it's 10 months or less, right? But 9 times out of 10, it's not 10 months or less that we have seen. Once again, just stay away from it. 100%, if you can, stay away from those loans, those, buy here, pay here's and things like that. Just kind of stay away from them.
I like that, Angelo. And you talked a lot about the things that people shouldn't be doing. And in the future, I want to talk about things that people should be doing because
Yeah.
I think we can both agree here people need to use credit cards. But if you overutilize them, you could hurt yourself. You
Yeah,
could
for sure.
you could hurt the opportunity of you getting into a home. So,
Yeah.
team, make sure you stick around. If you got something valuable here, make sure you like this video. And we will be back next week to provide more
Yep.
value for you, even more than we did today. Every single week, we're going to provide you more
Check us
value
out.
than the last. So, we'll see you next week, team. Bye.